Hey, what's going on, YouTube? So today we are going to be going into my M1 Finance investing portfolio. We're going to take a look at some of my best performing stocks and some of my worst performing stocks so far. And, obviously, depending on the time of the market, sometimes some stocks are going to be up, some are going to be down. So what we want to do is hop over here on the computer so you guys can kind of follow along as we kind of take a look at some of these different stocks and how they're performing overall. So I'm currently using M1 Finance. This is the platform I personally love to use. If you guys are interested in it, I'll have a link for them in the show notes down below. You can check them out. I'll also have a link for free tools for training on using this platform in case you want to actually functionally use this as best as possible. But beyond that, let's kind of break this down and see exactly how we're doing. So let's kind of see how the portfolio is doing, and then let's go ahead and look at these individual stocks and see how they're doing overall. Now, I do have a mix between some growth stocks and dividend stocks too. So if you're one or the other, maybe you'll kind of have a little bit of a mix. Or if you prefer just dividend stocks or just growth stocks, you can still get a good idea of what we have here. So you can see currently our investing portfolio is sitting at $32,733. We had a good day today, although the market with some of the stocks in my portfolio have been taking a really, really big hit, and you're going to see that here in just a second. So let's go ahead and switch over to the week. We're actually down $1,300 for the week. So pretty big hit so far right now, but we're in this for the long term, so I'm not too worried about what's going on right now. If anything, this is just more buying opportunity. You probably hear that all the time anyways, but the reason for it is because I'm not planning on selling anytime soon, so I'm gonna just see this as that opportunity to keep buying. Over the last month, we're down about $1,750. And also too, and I've mentioned this sometimes before too, where I like to show when the profile is negative, because I think it's important to see not just when it's going well, but also too when the portfolio is going down a little bit too. In the last quarter, we're only down $30 because we had a really good quarter prior to the market kind of going down. And then so far in the last year, you can see here, we're actually up $4,500. So a good chunk of that was market gains, as you can see, $4,200 almost. And then the dividends that we've earned was about $334 in total. So let's kind of take a look and see what stocks in our portfolio here have been doing really well and which ones have been doing not so well. So we're going to go to our holdings tab up here, and right now this is just kind of going based off of value. So we're going to click on unrealized gains, and so far you can see here, so the top stock in this portfolio is actually with Discover. So we're currently up 108%. This is unrealized gains, by the way. Just keep in mind, this is not including the dividends that they have been paying out. So right over here, you can see 108%, which is $575. So not too bad. We only own about 9.6 shares of this company, but nonetheless, we bought them in obviously at a really good time. We hear that all the time, where if I knew better, if I knew what was going to happen, I would have gone back in time and bought a whole lot more, because 100% on my money since I bought them for, I think I have owned them maybe for about a year now, is a really, really good percentage gain right there too. So next one up is actually Ally. So I bought these kind of around the same time, back in March of 2020, everything was going down, and a couple months after, April and May, the financials weren't really recovering the same way as a lot of others. So I saw that as an opportunity, so I kept buying a lot more into these companies. You could see with this one here, we're actually up 61%, which is about $502, and our buying price, or average price, is $32.71 with Ally. We own about 25 shares of this one, so this one a lot better as far as the amount that we have in shares than we did with Discover. After that, you can see when you actually are looking at this, Tesla is right now currently down pretty significantly overall, so they were actually one of the top performers in this pie, or portfolio, I should say. And this is 22% unrealized gains right here, which is about $376. We only own about 3.5 shares, so nothing too crazy here, but that's also what I really love about M1 Finance, is being able to buy fractional shares of stocks, because maybe you can't afford a full share of a company, and this just allows you to buy in at smaller increments. And then the next one after that, we have ADP right over here. We're at 21% gains, and you can see that that's $149 in gains. We own about 4.42 shares of this company. After that, we actually have Google. So Google's been doing really, really solid over the last couple months. We've had them in the portfolio here probably for the better part of 6 months, I would say. So in the last 6+ months, we've gained about 21%, which is about $305. I don't even own a full share of this company yet. You can see right over here, we own 0.77 shares, which is about 77% of one share, to kind of just break that down. And here's the interesting thing too, is that, buying into fractional shares, even when it's not a full share of a company, gave me the opportunity to make that $305 or, the 21%. Just imagining what I could do if I was able to put more would have been really nice. And then kind of to round this part out before we look at some of the worst stocks, we have Home Depot right over here. It's actually one of my favorite stocks in my portfolio as of quite a while now. We're up about 18.54%, which is about $307. We have about 6 shares of that, and our average price is about $274 on this one. So let's kind of break this down and see some of our worst performing stocks. Now, before we continue on, if you are somebody who needs to refinance their student loans because maybe you are paying a little too much in your interest, check out my friends Ernest. I'll have a link for them in the show notes down below. They will help you refinance your student loans entirely for free. And it takes only about 2 minutes to check out your rates and can honestly save you thousands of dollars. And you can use that money to invest more into the stock market or extra money into your pocket every single month. And again, I'll have that link in the show notes down below so you can go ahead and refinance your student loans. So you can see it right over here, right off the bat, we have Airbnb. We own about almost 11 shares. We're down about 23% on this stock right now. So that's about $462 that we are currently down in. We actually just got into them somewhat recently. So obviously it's kind of a big hit right here, right off the bat when adding them into the portfolio. But like we kind of mentioned earlier, I'm not too worried about it. If anything, I'm actually buying more into them. And I'll show you here in a second my actual activity when I'm going through and buying while they're on the dip, because I want to lower my dollar cost average, which, you can see my average price point is $177. I think they peaked, actually, let's see where they peaked at. If I go over here to seekingalpha.com. All right, so we can see right over here on seekingalpha.com, making sure everything's on screen. So their 52-week high was actually $219. And their 52-week low was $121. So we're actually getting really, really close to their 52-week low. So this is just more buying opportunity for us. Looking at the opportunities that the stock is going to go back up to its 52-week high, we are buying in at a really good price point. And we're kind of at the middle range of the average right now with $177 on there. But nonetheless, we're going to keep on buying. Next up here, we also have Square. Square and Airbnb I've actually added actually on the same day. But this one didn't take as big of a hit, but is still going down pretty significantly. It's down about 11.48%, which is about $131. We have about 5 shares of this company with about an average price point of $222. So the last one here, that is technically in the negative so far, is going to be Next Era Energy. This one is down about 3.2%, which is about $48. I believe it's a little bit less when you consider the dividends that this company has paid out, because it has paid out so far. And that's one other thing I like about M1 Finance is if I actually go into its thing over here and take a look, we can see a little bit better of, the total returns that we've gotten. So let this load up here for a second. So in our all-time here, we're actually only down to about $39.28 because we've actually made about $8.81 in earned dividends. So when you consider the fact that owning these shares of this company paid out those dividends, you can see that as a way to kind of mitigate the amount of losses that we've made so far. If I, unfortunately sold right now, I'd be down. But it's really nice to kind of see that kind of setup there. So let's go back here. So we got the next one here is going to be Texas Instruments. This one right here, we're actually only up about 0.42%, which is about almost $2 for us. We own only 2.6 shares. This one is also relatively back into the portfolio. I actually had it for a while, sold out, and then had to come back in. And then the next one after this is Amazon. So Amazon has not been performing well. And I've actually talked about this before. So if I go into Seeking Alpha, if we go to Amazon here, we can take a look here and how they perform. So you can see right over here, they've been relatively flat. So they've had a really good increase all the way up until about like September. And then after that, they was just kind of staying steady. Had a nice little dip here in March. It's gone back up, and now it's kind of going back on the dip with everything else that's kind of tech related. And what's interesting about this, and I've kind of mentioned it, like I said, was if I go back to the 5 years, you can see Amazon has kind of done that before, where it's like relatively slow growth, and then it has like a nice spike, and and then kind of goes back up and down, and it has like relatively steady growth, and then it has a nice spike again. So, obviously Amazon's going to be here for the long term. Obviously, things can change as well too. It doesn't always have to be the most dominant in the industry and anything like that. But I think if you're somebody who believes in Amazon for the long term, maybe this is just a really good buying opportunity, since it's trading sideways for the better part of, what is this, since July. So the better part of like almost 10-12 months at this point. So it's, for me, I'm still going to be buying in even with it being down. I don't even own a full share of Amazon yet. I own 0.59 shares, or 0.59 shares of a company. Yeah, I said that right. So yeah, for that one, it's going to be a little bit interesting. And then the next one after that is going to be DLR. This one is one of the ones that's kind of getting back into, the normal kind of returns that we would hopefully see in most of our portfolios, which is 8.5%. Now, this one actually a couple months ago was one of the worst performing stocks in my portfolio. And so what I was doing was dollar cost averaging pretty heavily into this company, because then I saw that opportunity to dollar cost average, which is, whatever my average price point is. If the sale price was lower for the stock, then I kept buying in, and it kept lowering that price point in the averages. And so when everything goes back up, I essentially got it at a really good discount. So with that one, I'll show you here. Go to DLR, and we'll kind of jump in here. So you can see it's been pretty erratic, up and down, up and down. So like this part of the this time frame right over here. Let me actually redo that. Right over here. This time last year, essentially, was the time I just kept buying a lot into them, because, again, it was so low and so cheap that I just saw that as a great buying opportunity. Plus, they pay a pretty good dividend here as well, too. They have a yield of 3.15%. So not only was I getting in at a really good price point and hoping, that growth is going to come back as well, I was also getting a really good dividend yield. Plus, the yield on cost for me is going to be better than anybody buying in right now, because obviously the price has gone back up pretty decently. You saw here it's 148 and my average is 137. That's why we have that 8.5 growth. But the other nice thing again is if we go in to our holdings over here, we can actually see it with the dividends. So with our dividends, because we've earned about 14.58 or 56 in dividends, we actually have a total gain of $90 on this stock right over here. And again, we were just buying in pretty heavily, which I personally love to do. And so for now, what I'm doing, like I mentioned, is actually buying quite significantly into Airbnb. Now, I don't have the most funds in the world here, of course, but I just did a $300 purchase this last day. So you can see here I put in 150 bucks. Sale price was 133, so it's significantly lower than where my current average is, which is the 177 current. I think it's like 177. So I bought about 1.12 shares in there, and you can see I also did that with a few other stocks like Square. You saw was down. Amazon is pretty low too. Tesla is obviously one of my better performing stocks right now, but with its price dropped, I see that as a good opportunity, because right now, it's hovering at a good price point. If we go back here and look just the day before, I did another $300. This one, I kind of let M1 Finance do its thing where it kind of split between a bunch of companies. Airbnb didn't get that much. That's why the second time around, I did a little bit more of a manual buy on that one. But we had more into like Google, Microsoft, all these different companies, because most of these companies were actually pretty significantly hit this day. So I just wanted to also get some good buying power on some of those other companies. And then what was it? Was it the week before? No, this was on the 11th. So I bought 3 days in a row when the market is down, and you can see this one. I also bought Airbnb pretty heavily as well too. This one I put $120 pretty much, and that was at a price point of $140. So I bought $120 worth at $140 pretty much, and then a couple days later I bought it $150 at $133. So I put in more at a cheaper price point and obviously got even more shares of the company as well. Now, also too, what I want you to do is click this video right over here so I can actually show you all the stocks that I have in my M1 Finance portfolio so you can see each one individually. My name is Dennis, and I'll see you in that next video.